How's it going, everybody? It is Dennis, and we're back with another video. And today we are talking about YMAX, XDTE, SDTY, and SPYI, and how they all compare to each other, as well as how they compare to SPY. So, first of all, first thing we're going to be looking at, we're going to get it straight into it. But before we do, I always say this, I don't talk about ETFs that I don't own myself. So we're going to go ahead and take a look. As you can see, SPYI, I have around 49 shares in that, which is 3.78% of my portfolio. I've been adding into this position as a long-term hold, if you guys may or may not know. I have YMAX, which is 13.52% of my portfolio, and that is 632 shares. We also have QDT, which is not XDT. This is QQQ version of XDT, but it still counts. It's a variation of round hill funds, and that one is 12.78%, or $249, or 249 shares, sorry. And the reason I don't have XDTE, but instead QDT, is because I do have a lot of exposure in SPY. As you can see, I have SPYI. It also could be said that YMAX is technically close to S&P. It does trend toward with S&P quite similarly, maybe a little bit being a little bit more risky. And then also I do have a large position in SPY itself. As you can see, I have two leaps options. I have one 540 and another 540. One of the 540 leap options expires all the way in March 20th. This is one of my newer ones, and then I have another one expiring in December 19th of this year, and this was another 540. And as you can see, I have a lot of exposure into the S&P, so I didn't really need another ETF like XDTE, so that's why I went for QDT instead. I don't have SDTY, and that's pretty much the only, and I don't have XDTE, but I do have the other variation of QDT. But just wanted to put it out there. I do invest into most of these ETFs that are up here on the screen. I have SPY, I have SPYI, and I have YMAX, and then I have a variation of XDTE in the QQQ, so QDTE. So let's go ahead and get straight into it, looking at the metrics. Using, of course, Seeking Alpha, we can see the metrics of total return with dividends of these ETFs. Of course, on the 1 year, we're a little bit skewed on SDTY, so we'll shorten the time frame later on for SDTY's sake, because it did start quite early into this year. Around February, SDTY was launched, and it's supposed to be a competitor to XDTE. So we're going to look on the month scale of how that's doing. But when looking at the yearly scale, we can see that SPY has gained 7.23%. SPYI has gained 8.10%, so it has beat SPY. YMAX has gained 4.57%, so it's lower than SPY and SPYI. And XDT is coming around the same level at 4.76%. As you can see, YMAX and actually XDTE had points where they were beating the SPY and SPYI. XDTE was actually beating SPY and SPYI for a while, as you can see, and then it kind of slowed down when we had the downturn in the markets. This could be for reasons such as, of course, it's harder for it to get back up to the same NAV as it was prior, and also it might be a little bit harder for the traders to trade with the high volatility markets not knowing what's happening. Maybe they lose one trade one day since they do 0 DTE trades, which is same day trading for options. So maybe they're not able to do that well of trading due to high volatility in the markets currently. So that probably could be an issue of why their performance is so poor in the last couple months, or in the last actually month period. It's been quite poor. And for YMAX, it did have some periods where it got close to XDTE levels in the beginning of the year time frame. It actually was doing pretty well, as we can see over there in the beginning. But it still couldn't perform quite well as all the other ones, and it lagged behind. And of course, SDTY at negative 14.35%, of course, on the 1 year time frame. But we take a look at the 1 month time frame, we can see a different story now. So SPY negative 4.77% on the 1 month time frame. SPYI at negative 5.24%. So as you can see also on the screen, it was outperforming SPY for a little bit, but currently it is lower than SPY. YMAX at negative 6.89%, still seeming to trend a little bit lower than SPY. But if we know anything from last year, and of course you can do historical evidence to back up future evidence, but based off historical evidence of last year, YMAX actually beat SPY last year, so that is also an interesting factor to put in there. I'm pretty sure it beat it by roughly 4% last year, so that is to be noted as well. And that also could be said that the reason is because they used to do monthly payments, or no, sorry. Yeah, did it do monthly? I'm pretty sure it did monthly. Or maybe I'm missing it up with something else, but I'm pretty sure it did monthly at one point, and then it switched over to weekly payments. So that maybe is a reason for why it performed so well last year compared to this year, but also the markets are a little bit troublesome this year as well. And as you can see towards the current dates of the market around April 23, as you can see on the graph, it is slowly trending upwards closer to the rest of these ETFs. XDT at 11.8, negative 11.82%. So XDT actually on the month time frame performing worse than YMAX, and that could be seen on the 1 year time frame. The 1 year time frame graph. We could see that XDT was performing worse, and that, like I said before, could be the reason of doing the daily covered call strategy. So since they're doing XDT calls, it could be a little bit of an issue from them to be able to get the best premium with taking the least amount of risk and also capturing the most amount of upsides, especially with the markets and how they move from a day-to-day basis. You know, Trump says something, markets go up or markets go down, and either they win or they lose, depending on their trade. And SDTY is also similar at negative 10.27%. So what we can see is zero DTE strategies like XDTE and SDTY do not do so well in high volatility markets as we're having right now. Sure, the premiums might be high, the premiums might be good, but overall return is not the greatest because, of course, high volatility, different things going on, and having the president we have currently, anything he says can move the market, so it's not the greatest times of trading for XDT and SDTY. But for YMAX, it's working out quite well. The reason is because they have, YMAX doesn't trade in itself. It receives dividends from its underlying holdings, which are their single stock ETFs. Those single stocks ETF trade on a weekly basis, pay out on a monthly basis, and therefore YMAX gets a weekly payouts, but in total the trades are actually made on a month time frame, and the options trades are made weekly. So therefore you have more time to play around with. You have more premium to play around with those single stock ETFs. They could do a trade in a week time frame. So say one day the market goes up, the next day it goes down. It balances out to an average, and they're able to win and walk away with good premium. And also good growth, and there is growth as well. And that gives them a month time frame to work that out, play it out, and it all goes into YMAX. So that's why YMAX is coming at negative 6.89%. But if we take a look back at the 1 year, we can see that XDT actually did better than YMAX by a little bit, by a little like percentage. And of course, it probably would have done better if it wasn't for this last couple of months. And the reason probably is because on a market that's, less volatile, more predictable, and trending upwards, it's a little bit easier to do zero TTEs because you know that usually on a daily basis a market might go up 0.5 or 1% on a good day, and maybe go down the next day, or it's kind of easy to determine what's going to be going on with market. As you can see, if we look at SPYI and we look at the graph of SPYI, most of the time it was an uptrend, and if it was an uptrend, it wasn't a sudden spike. It was quite fluent and easy to track if you're doing zero DTE trading, if you're looking at it from an options perspective. But enough looking at graphs, let's take a look at the ETFs and stocks themselves. So SPY, everybody knows S&P 500, SPY ETF. Huge ETF, not much to talk about here. On the 1 year, it's up 8.17%, as we saw over here. Actually, here it's showing 9.54%. So the data could be, but this was with dividends included. So yes, 9.54%. But without dividends included, 8.17% on SPY. SPYI is actually down negative 4.06% without dividends included. But of course, that's not that big of a drop. If you're buying in now, actually is a perfect time to buy, and that's actually what I've been doing. I've been cost averaging down my SPY position as well as a JEPQ position that I have, and those are adding up really quick in my portfolio into the percentage of my portfolio. And they have quite good returns. It's 10 to 12% returns. Nothing special. Of course, it's not 30, 40, 50%, or even close to 70, 100% returns like MSTY and Tesla and all that sorts. But still 10 to 12% returns. They're consistent, they're great, and they track quite well. They're underlying either the QQQ or the JEPQ or SPY with the S&P 500. We also have, of course, YMAX. That one is down. With NAV, it's down negative 34.85%. But of course, as we saw with dividends, it is up 4.57%. And this one has actually a good amount of investors in it. If we could find where their net assets sits, it's $704 million currently sitting in YMAX. So they do have a good amount of net assets. MSTY does have a lot more. I'm pretty sure they're over the $1 billion mark. And Tesla is around the $1 billion mark, I think around the $800, $900 million. So Tesla and MSTY are quite high with those net assets. YMAX is getting close there with 704. Then we take a look, or actually we could go back and take a look at SPYI. SPY sitting at 3 billion net assets, so that's pretty damn good. Then we take a look at, of course, XDTE. XDTE actually doesn't have its net assets posted. That's strange. Why that's not there. I don't know if it's too low for the reason it's not posted there. But yeah, net assets not posted. That's quite sad to see. But XDT is down negative 19.17% with the NAV compared to negative 34.85% of YMAX. But as we can see on the chart on the 1 year, YMAX does perform quite similarly to XDT, and that's because of the weekly payments and also the higher payments than XDTE. Then we also have, of course, the last one, SDTY. This is YieldMax competitor to XDTE from Roundhill, and they are at negative 18.41%, even though they opened up a month later, or almost 2 months later, 2 months into later of the start of the year. So they opened up in February. And XDT has been around for a while and is down negative 19.17%, while SDTY just opened and is down negative 18.41%. Of course, it could be said that the time they opened was quite poor, and that's obviously an issue. But there's not much you can do. They are, of course, trying to be a competitor to XDTE. But honestly, if you already have XDT, there's no point of selling out of XDT and buying SDTY, as you can see with the charts on the 1 month. XDT and SDTY do perform quite similarly. Of course, SDTY is up by like a 1% mark, 1.5% mark currently compared to XDT, but that just could be on the short time frame because of, you know, error in management, error in option trades. And of course, what is my outlook on these when it comes to SPYI, YMAX, XDT, and SDTY? And how do they compare to SPY? And why have I not added XDT and SDTY into my portfolio? As mentioned before, I do have large positions in SPY. I have 2 leaves contracts in SPY expiring in a year or less, and those earn me option income on a weekly basis because I trade covered calls on the top end and make my weekly income off there. I actually have to do a trade of the time I'm uploading this video. I have to do a trade to extend my covered calls to next week. So for me, owning XDT and SDTY, there's no really point to own it. I'm doing quite well with my own transactions on SPY. The reasons I own YMAX and SPYI, well, SPYI, first of all, it's pretty nice to have. It tracks SPY pretty well, as you can see, negative 4.78 to negative 5.24%, plus or minus 1% on that. And also it pays 10 to 12% dividends, so it's quite reliable. For me, it's something more to have just in case, say, I do a wrong trade, say a leap contract goes wrong, or a covered call goes wrong, and there might be maybe a time frame of like a week or 2 or a month where my contracts are not making the same amount of income that like they usually do. I have SPYI to back me up in case of anything. Also JEPQ for the QQQs. For YMAX is just a position I've been adding for a while. I've been slowing down on my addition to YMAX. The reason being because they started slowing down their dividend payments. It went from 25 cents to 22 cents to 20 cents. And at 20 cents, I was like, okay, I'll have 500 shares. It'll pay me around $100. I'll get to 1,000 shares. It'll pay me $200 a week. And then it started going down to like 17 to 15 to 13. And it keeps going down and down and down. Of course, that could be mentioned to the NAV. When the NAV drops, so does the return on your dividends, the dividend distribution, and that is because it's determined based on the NAV. So say you're $12 per share on YMAX, right? What is YMAX currently sitting at? YMAX is sitting at $13 a share, right? If they're paying 40% annually, 50% annually, distributed into 12 months, that's around what is that, like 50 divided by 10? That's 5. It's around like 4%. Let's say they're paying monthly. It's not that high. I think it's more on the 4% mark. Let's say 3%, right in the middle, right? 3% of $13 is obviously going to be around, like mentioned before, it's going to be around the 14 cent mark, right? I think that's actually more. I'm lying. I think it's more than that, or doesn't matter. You understand what I mean? The percentages are based off the NAV, right? So if you have a 3% return, it's going to be based off $13. 3% return based on $20 is going to be higher, obviously, than $13. So that's just simple NAV and math, right? There's nothing much to explain. So like we saw before, the reason we were getting 20 cents a share, the reason we were getting 25 cents a share was because the NAV was higher. And it's sad to see. Of course, it would be great to see if they could go back up and then increase the dividend distribution. But sadly, it's been going down and down and down. And for me, it's just looking like a place where I'm going to stop putting money into it. I know that, a lot of people say that if you add a little bit in, and that's what I'm doing with Tesla currently, you add 50-25% in to upkeep your dividend distribution. And yes, that is true. But for me, my money is better elsewhere. I'm just using this more of like a assistant to provide me cash reliably, even though it's decreasing month over month, week over week. Actually, surprisingly, QDTE actually has been performing quite well with his dividend distribution. If we take a look at history on QDTE, we can see that even though QDTE has been going down, the yield distribution has been quite consistent. We've also been increasing the share count as well. We've been reinvesting back into it. As you can see, reinvestment. But it's been quite consistent. 57.20, 61.09, 44.15, 51.77. We have a 66, 54, 35. That was a low one. 60.30, 56, 57, 52, 42. So it's been quite consistent when it comes to QDTE, right? So yeah, QDTE has been great. Roundhill is quite good on being consistent even with their NAV. But YMAX on the other hand, I don't know. I don't know what they're doing. If you take a look at their dividends, we can see we went from 82 to 111. This was a high one. And then 80, 84, right? And we're going from 144, 61, 94. It's all over the place. Yes, we are getting high ones here and there. But if you look at the charts, if you look at the charts that I have, if you watch any of my other videos, when you look at the weekly charts, the dividend distributions are just continuing to get hammered over and over and over again. And just having that thing of just adding more and more shares to it is just throwing money into a fire, theoretically. Of course, we all know, and I do believe in the theory that once they do pay themselves off, it's all profit from there. YMAX is way far from paying itself off. As you can see, YMAX, I have currently $8,345 into it, negative $2,757 down, or negative 24%. It could be said that some of this is reinvestments, because I've actually not been adding much money into the account cash-wise from outside sources. So most of the money that is in the account is just reinvestments or option income going into it. So yes, it could be said that it's working, but this this $8,345 plus whatever how much this is. So say in total, this is like almost a $10,000 part of my account. I am nowhere close to paying that off. Are all these $10,000 cash that I put into it? Obviously not. A lot of this is, like I said, reinvestments, option income. So I can't really determine the exact payoff period because I've been adding so much into it, and I don't know what is cash and what is not at this point. But in generally speaking, YMAX is just, I don't know. YMAX and a lot of YieldMax ETFs, I'm slightly wearing off of it. I still do believe that it's better to keep it than sell it. I know a lot of people like Entrepreneur Investor, if you guys follow what that is. He just recently posted that he sold Tesla and bought TSW. If we could take a look at that. I think that's what it is, TSW. Yeah, it's the Roundhill one. And if we take a look at TSW, it's down, man. If you take a look at the 1 month, it's down negative 0.65%, or negative 34.10%. Of course, I think this is a little bit off because it just opened up. But if we take a look, let's take a look at, go ahead and go on Yahoo Finance, take a look at this. If we look at TSW, and we take a look at the 1 year, yeah, it's down negative 39.78%. So I don't know if that was the smartest play from him. I left a comment on his video to see what his response would be. But looking at YieldMax, looking at YMAX, and all the YieldMax ETFs that I do own, for me, it's just like hey, I bought it. Maybe I made a mistake buying them in. But anyways, Tesla at this point is close to paying itself off. Like I just mentioned before in the last video last week, by June time, it should have paid itself off. Yes, I did reinvest like 50% back into Tesla. But so what? You could say that it's going to take 2 more years to pay itself off, or maybe a year, depending how Tesla trends. If Tesla trends upwards, it's going to be even quicker, because I lowered my average cost, and also dividend distributions go up when NAVs go up, as we know, assuming they can do profitable trades. So for me, YieldMax at this point is just like a, hey, I'll just own it. It'll pay itself off sooner or later. Sure, I'm not able to have that money and use it now. But hey, listen, it's better than selling for a loss and then buying into like a Leaps options that has like 100%, that needs 100% margin requirement. So then that lowers my margin. You know, I'd rather just use that cash, which then I can margin on when the market's like, you know, calm down a little bit, because currently I'm not taking a margin out on that. But I could just, you know, lower my margin, I could get those dividends and then take margin on those dividends and put that into SPYI, and SPYI will give me consistent returns, even though it's 10 to 12%, but it will give me growth. It will close to SPY, and it'll give me dividends as well. So, you know, that's just my take on it. I know a lot of people are doing that in the community. I'm reading the Reddit post, reading the Twitter posts. A lot of people are doing the same thing, taking out dividends, letting it do its thing. It's negative in your account. Who cares? Let it be red. You know what I mean? It might affect your account on the short term, but in the long term, 2-3 years out, they're not going to go anywhere unless the company closes, right? And I doubt they will, because they're making good percentages, or they're making good fees off of you and your money, right? If you're getting 1% return on MSTY on a $1 billion net assets, that's a lot of money they're making, right? So for them, it's profitable. As long as the underlying exists, they don't really care. They'll keep running it. Hopefully enough time for you to make your money back and more. And then while you're doing that, you take that money and put into SPYI, which will give you a good return. You're guaranteed a 12% return on dividends when it comes to SPYI, right? We're not guaranteed. You're not guaranteed anything, but we know historically you would get a 10 to 12% return on SPY dividends. And then plus whatever growth you get from that as well, right? And reinvestments and blah, blah, blah. Or you go ahead and use that cash to, I don't know, buy some other things, you know, buy something that's more steady like JEPQ, or do some option trades, or buy just S&P in general. S&P last year went up 24%. Is it going to do the same thing this year? We don't know. But just some things you could play and do. And that's what I'm doing currently with YMAX, Tesla, AMZ, and all these YieldMax ETFs I have, even XDTE. You know, we know that these things are burning up. We know that they're not the best strategies at this point. You know, of course, they can have better plays. Actually, AMZ and Apple are doing quite well. And some of the single stock ETFs are actually not that bad. And, you know, AMZ, Apple, but you just need that consistent growth for them to really work. I made a video about this like a year ago. It's called the golden ticket idea, right? So the golden ticket to the single stock ETFs is something that just trends upwards and just continues you to make your profits consistently, as well as keeping that NAV stability by providing you growth on the lower side. So, right, they have synthetics. If that synthetic gains value and they're able to gain value in the synthetic, the NAV goes up. And then also your covered calls make you income. So when they pay you out, so say you went up $1 in value, they pay you out $1, you're back on the same level, right? It goes up $1, they pay you $1, back at the same level, and over and over and over. And that's just the golden ticket theory on how these ETFs will work. Is it going to work like that all the time? Obviously not. No, there's going to be downturns in the market like we have right now. But that's just the golden theory, or the golden ticket for these funds, which sadly is not possible all the time. But yeah, that's pretty much it. I know I went on a little bit of a ramble towards the end. I just wanted to give you guys my feedback on YieldMax, on Roundhill, how I'm playing them, what I'm thinking about them, where am I putting my cash, how am I playing with my cash currently, and how am I changing up my portfolio for something that suits me better in my own financial journey. Of course, everybody's different. You could take out $100,000 loan, put it all in MSTY, and hope that MSTR, the underlying, doesn't go bankrupt on all its loans that it's taking on Bitcoin. But hey, do whatever you need to do. Be smart with your money, and I'll see you guys next week for next week's video, going over how much we made for the month of April, right? April's ending, so we're going to see how much we made for April. I'm going to be doing my last trade, so we're going to be wrapping up April's income. Anyways, see you guys next week.